What's up, everyone? It's Caddy with MoneyVest. So welcome on board for another Market Open live stream tomorrow. Tomorrow, folks, June 12th is the big day because we do have the inflation numbers and the Federal Reserve's FOMC meeting, so summary of economic projections, as well as the statement also coming out. As always, if you guys can see me and hear me, just give me a thumbs up. I just want to make sure the audio and the video is working well. Just want to make sure that we are indeed live here. So again, if you guys can see me, hear me, just let me know and we should be all set. I'm just going to send this link over in our Discord as well. Let's analyze some of your stocks. Join now. Okay. So let's do this. If you have any questions about any specific stocks you want me to go over, I'm happy to discuss those for all of you as well. Let me just see here very quickly. So is there something wrong with the YouTube backend here on analytics? Just give me, oh, okay, so we are getting some votes. Okay, 19 votes, but I'm not seeing any of the chat here. So type in if you guys can see me and hear me. Just want to make sure that everything is working well because we do have 20 votes. But right now I'm not seeing any here in the chat rate. I'm not seeing that on my back end. Is like here, let me reload this page a little bit, see if I can see something. And again, tomorrow we've got very, very important, if you guys can hear me right now, tomorrow we've got the very important inflation numbers coming out. There we go. Now it's starting to populate. Okay, now I see it. I'm going to pop this out here. I'm going to move this over here and we should be all set. So again, thank you so much for joining, everyone. I really, really appreciate it. Simran, thank you so much for that confirmation. Really appreciate you. Thank you for joining. Super Gamers, when's inflation data coming out? So tomorrow, June 12th at 8:30 a.m. Eastern is when the inflation numbers come out. And again, we'll be live to cover those numbers. And we'll also be taking a look at the SEP and the statement released from Federal Reserve, so FOMC. That's also going to be released tomorrow. So tomorrow is a very, very important day because not only do we have inflation, we've also got, Federal Reserve's statement and SEP as well. So that's really going to be a market moving event here from the market standpoint. So again, what's your opinion on Oracle? We can take a look at that. And morning, Walter, thank you so much for joining. Caddy would like to discuss recent price action and technicals of ACLS and PayPal. Fundamentals are known, but the price action is interesting. PayPal dropped during Apple's announcement, but recovered as well. So we'll take a look at that one as well. So again, thank you so much for joining, everyone. I really appreciate you. Drop a like as you are coming in. And also subscribe if you haven't already. So first things first, let's quickly go over to Oracle. I believe they were going to report earnings, or they are going to report earnings here today after the bell. $1.650 is going to be the EPS expectations, and revenue expected at just over $14.5 billion for the company. I've actually analyzed this stock before. I do think it's a fantastic SaaS company. No doubt about the fundamentals. It's got fantastic numbers in terms of revenue, earnings. Everything's been very strong, especially the margins. But I think the net debt is not there. Oracle is one of those companies that doesn't have a lot of cash. It's actually, so if you come over to balance sheet, so $78 billion of debt, net debt compared to the cash that's on the balance sheet. So that was a little bit of unusual for a SaaS company, as we discussed in our previous updates and videos as well. But I believe I put down a fair value or an intrinsic value for Oracle closer to $59 to $60 a share, with another support sitting roughly at about $100 a share. Very, very strong support for Oracle. And again, earnings coming out later today. So we'll take a look at those numbers and I'll do a separate, more dedicated video on Oracle as well. So PayPal here is down about 30 basis points. So if you come over, take a look at the price action. Really what we have with PayPal is a massive resistance, a huge resistance and a wall of supply at around $68 to as much as $70 a share. So this right here is going to be that area of resistance and area of supply for PayPal, and a very strong support at $65 to as low as $57 per share for this company. So a lot of consolidation sideways. It's not able to break out of that resistance at the moment. So the moment it breaks out above $68 to as much as $70, that's when we could see it get up to as much as $76, $77 a share. So that is going to be that target and that resistance to keep in mind right now for PayPal at the moment. Talking about ACLS technology, so ACLS, this was on our watch list for a very long time for a potential swing trade because of how oversold it was, and of course the company's also got very good fundamentals, very strong numbers in terms of revenue growth, earnings growth. Expectations wise, this year is going to be a bit of a decline. So if you come over to earnings expectations, you'll notice that 2024 is a slight decline from 743 down to 633. So that's about $1.10 EPS decline in 2024, but then accelerating back up starting 2025 all the way up to 2026. So that's going to be almost a doubling in earnings per share in about 2 years. So I mentioned this, that ACLS is probably going to go through some headwinds in the short term. And as we start looking past 2024 numbers and we're looking at next year's numbers, that's when I think ACLS is going to start moving back higher because of the expectations are pretty strong starting 2025, 2026. But technically speaking, we've talked about how oversold this stock was, and it's now starting to move right back up. So that's good. We've got a big resistance to watch, Vault. That's going to be a level closer to around 135, 136. So that would be a resistance to keep in mind at first because we've gone rejected there multiple times. It's also a triple top resistance for ACLS. You can see a big area of supply here for this stock around 135 to as much as 144. It's about $9 to $10 range of area of supply here. So if I mark that out, that's going to be right over here for ACLS. So that's going to be a potential target. Okay, gold looks interesting for other DCA. So gold, Matt, in my opinion, I think gold is something that you can periodically just keep on buying because I think gold over the long term is a good store of value. That's why I've been, buying more physical gold, and again, just allocating a little bit as a way of diversification, as a way of storing value. It may not outperform. And again, investing in gold is not this idea that, I'm going to outperform the S&P or outperform other investment classes or asset classes, but it's really just a way to store, your capital into something that's a hard asset. And it's going to, in my opinion, at least appreciate in value over time as it becomes more and more scarce. And again, this, commodity here is, again, one of the best ones out there, in my opinion. Diamonds, I'm not so sure, especially when you've got lab-grown diamonds. Maybe some people would disagree. Simran may disagree with me on that, but I do prefer gold over diamonds as a long-term investment in commodities. Silver is also good, but I'm always going to be more focused and more interested in gold as opposed to any other sort of rare earth material, precious metals, or commodity there. Okay, so looking at Apple announced transactions in their payment services, something like that's why PayPal dropped during the day but recovered quickly, which in my eyes means strength. Yeah, so again, I think it really comes down to ecosystem, right? So Apple, yes, they're going to be allowing payment services within their platform, but it's only going to be geared towards the ecosystem of Apple products, right? So if you're not using Apple products, it may be difficult to transact and to send or receive payments via their payment service. But PayPal is more global, right? So there's a trust that's already been built, and they are very, very global, operating in over 190 different countries. And even when I'm starting my business accounts here in Dubai, I'm using PayPal as a payment processor and receiving payments in my PayPal account, my PayPal business account, because again, it's more global, and it's got a much better infrastructure for sending and receiving payments globally. So that right there, I think, is one of the reasons why there is still a moat, right? So a lot of people think that PayPal doesn't have any moat and it can be very easily disruptible. To that, I do disagree because, again, PayPal is global. No other sort of payment processor or payment company is as global as PayPal, operating in over 190 different countries. It's not subject to specific ecosystem or app or hardware, piece of hardware. So that I think is very interesting. Yes, in the future, if the numbers start to show some weakness, and again, it all comes down to numbers, right? So whatever we analyze, whatever we talk about for whatever stock, XYZ, whether it's Nvidia, whether it's Tesla, whether it's Apple, PayPal, whatever company that it is that you are analyzing for, everything eventually, sooner or later, everything can be quantified and will be quantified. Everything and anything will be quantified eventually. Because if we believe NVIDIA is going to be this end-all, be-all generative AI chip manufacturer with massive margins, massive growth, we'll see that eventually in the numbers. If that's not the case, again, we'll see that in the numbers. Like, for example, Tesla, there's a big story around Tesla that, we can be, with FSD, full self-driving, robo-taxis, it can be huge with margins and whatnot. Eventually, we will see that in the numbers if Tesla can execute and become that. If not, Again, we'll see that in the numbers. And right now we are seeing what? We're seeing compressing margins. We're seeing deliveries that are not increasing year over year. We're seeing demand softening. Revenue also, as a result of deliveries coming down, is not increasing significantly. And profitability is also struggling. So again, everything can be seen in the numbers. And right now, PayPal, purely on a number standpoint, if you were objective, still growing. I mean, it's still a company that's able to do 12, 15, 16, 18% growth year over year, $5 billion in free cash flow, pretty strong earnings per share, and consistently increasing. So if you come over to PayPal's expected numbers here, you can see that this year they're expected to decline a little bit from 510 down to 413, but pretty stable growth here over the next 4 or 5 years, and revenue also expected to keep increasing to as much as almost $40 billion by 2027. So as long as that holds strong and the company is growing, I think there is potential for it to continue. Okay, so let's see. Caddy, you're a young dude. I have some young guys in my team, and they say that gold is an old thing. They prefer gold 2.0. Bitcoin as a store of value. Your thoughts? I think Bitcoin's amazing as well. I think Bitcoin is very good too because of the scarcity nature, because there's only so many Bitcoins, I think 21, 22 million that can be mined. And eventually they're going to run out. And of course, the price is going to go up because of the scarcity of that asset. And also the demand, if that continues to be stable, even if it increases, that's only good news for Bitcoin's price in the future. The difference, however, is that gold has a lot of use cases, Bitcoin as well, with the technology that it has, but again, it's more of a digital currency or digital asset, if you want to call it, with no sort of underlying inherent, intrinsic value. So that is something to consider. But no, I do agree. I think Bitcoin also has similar characteristics when it comes to supply and demand as it is with gold. Anything that is scarce, right, in the world is eventually going to increase in value as there's a demand for it. Doesn't matter what it is. Quite literally, it doesn't matter what it is. If there's demand for a certain thing, and if there's scarcity of that very set thing, then eventually the price is going to go up because there's going to be more bidders, more buyers present, and because of the limited supply, they're going to bid prices higher. And that's how, in a free, more open market such as the stock market, prices go up because there's limited number of shares, of course, for a company. And then as demand is coming in, buyers are coming in, prices get bid higher and higher. I think, again, so gold and Bitcoin do go hand in hand, very similar characteristics with respect to supply and demand, but of course, very different assets altogether. And I don't prefer one over the other. I think, there's both asset classes worth diversifying into. So I do have gold and I do have an ETF that has Bitcoin. So there's not one or other, there's one and the other. So what do you think happens to Tesla with this vote? I do think that it is going to get passed. I think a lot of people have been voting yes. So I think it is got the potential to get approved by the shareholders. But again, we'll find out on June 13th, which I think is going to be a very important day for Tesla. And more importantly for Elon Musk as well. Do participate in the poll right now. We've got about 75 votes here, 45% expecting the markets to be down. Pre-market, we've got the SPY here slightly down about 25 basis points. QQQ is down 26 basis points. And the Dow Jones here also about 40 basis points lower, with the 10-year yields sitting at just under 4.5% at the moment. And again, tomorrow is the big day. Literally less than 24 hours now, we're going to have the inflation numbers, right? So CPI numbers to come out. So Andre says dilution with respect to what, Andre, specifically are you talking about? Take a look at MongoDB, and SLV ETF has done very well. So silver, so has done also really well. So if you come over to SLV, pretty much pushed up to $29, almost $30. At the moment, and of course, since February of 24, it's moved up 44%. So yes, it has done really, really well. So MongoDB is another company that I think has a pretty significant use case when it comes to data storage. In fact, we are using MongoDB for our MoneyVest platform to store data. It's just that profitability-wise, it's going to take some time, and that's really what it comes down to. At the end of the day, is like profitability is everything for any company. To be around forever, profitability and margins are the most important thing. Doesn't matter if you're growing revenues at 1,000%. If you're not able to generate profit, then your days are numbered, right? Your life of the company is limited. If you want to be around for decades or even centuries, profitability is the key. You need to figure out how to be profitable so that it can be a self-sustaining, more viable business from the beginning. And right now, MongoDB is struggling with profitability. Revenue is growing, which is solid, but losses are also growing. And in the first quarter 24, losses of over $80 million with the revenue just over $450 million. So maybe we can take a look at this company. We can do some more analysis. I mean, it definitely did drop last week about 32%. I got a strong support at 138 for MongoDB. And that right there, I believe, is where I could start to kind of see MongoDB as a potential. But again, one of the main criteria that I look for is profitability. If the company is not profitable, it's probably not going to make a big piece of my portfolio ever. So maybe have a small position depending on the conviction level. Mongo is a good DB. It is used widely, but a lot of companies use it as a service in the cloud, or they just use a free version. I don't know where Mongo makes money, to be honest. Yeah, so again, profitability is everything. And this is why NVIDIA has kind of unlocked the most potential here. This is why NVIDIA is able to do this so well, is because not only are they growing really well, not only is there high growth, there's also high levels of profitability. There's high levels of margin here with NVIDIA. And when you combine those two things, that is exactly what Wall Street loves. Wall Street loves high growth and high margins, because that's what they're basing it off of. That's the prime sort of core of any growth company, is high growth and high profit. And NVIDIA is able to capitalize on both of those things and just go parabolic. And Tesla used to be high growth, but of course, high profitability wise, not so much because of the margins, because of the industry that it belongs to. But even if you compare that to other automakers, their margins were relatively speaking much higher compared to other auto manufacturers. So margins were good and growth was fantastic. And as a result, Tesla also had its NVIDIA moment in the past. And then, of course, growth started to come down because numbers get bigger and bigger. So you can't just keep expecting the company to do like 100, 200, 300% growth year over year. And then, of course, also talking about margins, which have now been coming down to more normalized level. And as a result, Tesla is just not doing well, right? It's still consolidating sideways in the 170s, no clear direction, just moving in a very, very range-bound pattern as well. NVIDIA here absolutely crushing it every day. New all-time highs almost every day. Okay, let's see. So are you talking about buying actual gold 99.99% or just gold-related stocks? So I personally, Alex, buy gold, like physical gold with 24 karat gold, which is about 99.9% purity. Let me see if I can bring up the gold purity chart. So let me just do this. And I'll do gold. So if you look at this, so I basically prefer, let's see if you can go to bullion by post. Yeah, so I basically prefer the 24 karat gold here, 99.9% purity. Then as you go down the carats, of course, there's combination of silver and copper and some of the other metals as well mixed into that bar or that biscuit or whatever, or coin, whatever you're buying. Or, of course, 24 karat. This is the finesse or fineness, 23 karat. Then we got 22, 21, 20, 18, 14, 10, 9, 8. And that's how the percentages go down for different carats. But when I'm picking up his physical gold, I'm picking up 24 carats and 99.9% purity ones. So that, of course, is real gold, actual gold, and not anything mixed or other commodities mixed, metals mixed here. Take a look at my comment here, gold, and share your thoughts about the use cases. Maybe I don't know something here, so which comment? A lot of use cases I've seen have been useful only on jewelry because in industry, the metal is not used because it's too expensive. Yeah, so jewelry is one of the biggest use cases for gold, obviously. And again, it's certain. It has to be certain carats because when they make the jewelry, most jewelry is made from like 18 to 20 karat gold because they can't mold it. If it's all 99% gold, they can mold it into different sort of structures. And as a result, 24 karat gold most often is not used in jewelries. Not saying that it's never, but most of the times, like even if you buy luxury watches, for example, they're going to have 18 karat gold, not 20, 22, or 24, because again, they can mold 20 or 20 karat plus gold in those sort of ways. So Yeah, great news. I've been buying actual gold 24 karat since 15 years ago from China and Hong Kong. So far, sitting pretty. Thanks. That's great. That's fantastic. 15 years ago, wow, the price was already moved up a lot. And the thing is, the interesting thing is that gold actually moves in these cycles of 10 years, right? So gold actually outperformed. What many people don't tell you is that gold outperformed the S&P, the NASDAQ, significantly during this decade of 2010 to as much as 2020, was it? I think. Yeah. So actually 2000 to as much as 2012. So those 12 years, gold absolutely crushed the S&P and the NASDAQ. And then prior to that, it also crushed from 1976 to 1980. So those 4 or 5 year period, again, did really well. Then 10 years consolidation, then 10 years of massive outperformance, then another 10 years of consolidation. So many people have argued that, okay, this is the beginning of a new cycle, 10-year cycle for gold that we could see outperformance, and it could get up to as much as $4,000 or $5,000. So yeah, so for those reasons, I think it's really important to keep in mind that this is also an asset class worth looking into. Anyway, so we got a couple more minutes left for markets to open. Please make sure that you do participate in the poll. 102 votes right now, 42% expecting the markets to be red, 29% green, and 29% flat. We can take a look at CleanSpark as well, which has done really well. It's moved up from $7 to as much as $15, and of course, more than doubled here since October of 23. The stock is up, I think, over 200%, 360%. So massive move to the upside for CleanSpark. I will mention a big resistance now coming up for this company. This is going to be that area of supply and a very strong area of demand over here for CleanSpark. So a little bit more overbought, even on the weekly time frame. It's starting to consolidate a little bit, and I would watch a more short-term support here at around $14 for CleanSpark, $14.20 to as much as $14 for the stock here. Previous resistance acting as a new support here for CleanSpark. So again, if you have any questions about the macro, about the economy, tomorrow's numbers, inflation numbers, let's just quickly take a look at what is coming up. So when we go to Econ Day, let's take a look at the expectations, and then we'll also run through the BLS website to see what the previous numbers were. But this right here is a CPI report. So for tomorrow's consensus for consumer price index, month over month, 0.1%, year over year staying steady at 3.4. Core CPI, which is excluding for food and energy, we're looking at 0.3%, and ex food and energy, so core CPI year over year 3.5% as well. What do you think about tomorrow? We'll bring in terms of CPI prints and the Fed talks. So I think the Federal Reserve is going to continue to be more hawkish. I do personally believe that I think Jerome Powell is going to want to sound tough in front of the markets because, number one, they have lacked that greater confidence which they were expecting in 2024, so they're not getting that. And number two, we haven't really seen a sizable move down in the inflation readings. Now, in the previous numbers, inflation readings did again come down, but it was not as much as what the Federal Reserve wanted to see. Tomorrow's numbers are coming out prior to the Jerome Powell's speech, so it's most likely not going to be affecting the SEP or the statement. It's most likely going to be affecting the speech itself, the 45-minute speech, because there's going to be a lot of questions asked about the CPI numbers from tomorrow, to which Jerome Powell is probably going to say that, we just got the numbers this morning. This is how I think about them, or this is how we feel about them. But at the same time, tomorrow's CPI numbers are not going to be a part of the statement or the SEP, because that's already going to be complete or most likely almost done by the time CPI numbers come out. So meeting's supposed to start today. And of course, we got the speech tomorrow at 2:30 p.m. Eastern. So the numbers I do expect to be better, slightly better, because oil prices were down in the month of May. It was down like 5-6%. Crude oil was down. So that could kind of help inflation a little bit. And then really comes down to shelter prices, food prices, all of which have been rolling over a little bit slowly and steadily year over year. We're not seeing that much of an increase compared to what we are used to seeing in 2021, 2022. So if you come over to the charts here, what we are going to see for consumer price index here on different categories, you can see again, we're consolidating sideways. Really, we haven't really dipped below 3% since June of last year. So June 2023, 3%. And since then, we have just been staying above 3%. So we haven't really dipped below 3% in a very long time. in just about a year. And then if you come over to Shelter, again, it's been rolling over from highs of 8.2%, now 5.5%, but still way above where we need it to be. And food prices are now starting to stabilize a little bit at 2.4% on a year-over-year basis. But again, the interesting thing is that none of this really matters because prices in general keep going higher and they are up. It's just a change in year-over-year CPI is what we're quoted every single month, which is the numbers that we just went over, 3%, 2%, whatever it might be. That's just the year-over-year change. But if you look at the CPI index, which is the consumer price index itself, and the price level, it's on a consistent move higher, right? It's just been going higher and higher. And that simply suggests that prices for most goods and services has been up a lot in the last 3-4 years, 20, 30, 40, 50%, in a very short span of time. And just a year-over-year change, it is now coming down, which everybody seems to be celebrating right now. Okay, so what's your analysis of CAVA? So I've actually done a video on Cava, very similar to Chipotle. I've done a video on this company. I think we analyzed it before. Very strong move from $28, $29 back in November of 23, up over 190%. And again, make sure that you do check out that video if you haven't already. I've already done a video on this stock here. And let's just quickly take a look at the valuation and the fundamentals now. Wow, so 12.5 times sales with really, really low margins and over 300 times earnings multiple and price to cash flow over 91 as well. So very, very overbought. RSI, MACD, L3 banker, oscillator, as well as the valuation. 12, 13 times sales, over 300 times earnings. So again, it's got a extremely expensive valuation that, again, is after the fact that it's up 190, almost 200%. Enphase, on the other hand, is coming up to its resistance now, which is a good thing. $130. That's the level that it needs to break out of in order for us to finally be trading above its long-standing area of supply and resistance of about 138 from back in August of 2023. So that's a level that we haven't really broken out of in a very, very long time. Jim Cramer put Palantir as the 4th most dangerous stock in the market. What is your take on this? Thanks, Caddy. So Palantir is, very, very fantastic business. I think this is a company that's, got tremendous amount of potential. We've covered Palantir on the channel like a million times. We've done a lot of videos, from 3 years ago. We talked about Palantir's new contracts, new deals that they're doing with other governments, other countries, other companies, commercial and otherwise. And it's done, again, really well in terms of generating profitability. So see, this is what happens when a company turns from a loss-making company to a profitable company, right? Because Palantir did an excellent job in turning the corner, and they're now generating cap profitability here. And that's what Wall Street wants to see. So you can see the last 4 quarters, 5 quarters, how margins have increased, how profitability has gone up. And that's exactly what Wall Street and investors like to see. Because this is what's going to, identify Palantir as a company that, okay, it's investable long term because it's got profit. We don't have to worry about, loss-making company with negative cash flows who's going to have to raise capital while diluting shares or take on more debt to survive. So none of that we need to worry about, right? It's a profitable company, positive free cash flows, plenty of cash, by the way. I mean, this is probably the most company with the most flushed cash with little to no liabilities. Like, this is a very, very lean operation because if you look at the balance sheet, negative 3.65 billion. The company's got more cash on the balance sheet, 3.87 billion, than compared to all liabilities. Their cash amount is almost 4 times more than their all liabilities. It's not even debt, all liabilities. So they can pay down all their liabilities and still have over $3 billion worth of cash left over. So absolutely insane balance sheet here. And that's how we come down to the net liquidation value, right? Now tell me this, a very simple, logical question. If Palantir was trading, you know how people say that, there's no such thing as guaranteed profit, but there can be situations where it could be, because if, for example, Palantir tomorrow was trading at less than $3 billion, right, in market cap. Right now it's at $51 billion. So, for example, Palantir all of a sudden trades at less than $3 billion in market cap. It would become a no-brainer buying opportunity because the company now is trading below its asset value. It's literally trading below its liquidation value. If you take all the assets of the company, cash, property, plant, equipment, all the assets, and sell it, you'd get more money than where it's trading right now. So that is a huge discrepancy in the market. And things like that used to happen, not anymore. It's laid out perfectly in The Intelligent Investor. Benjamin Graham and even Warren Buffett talks about it, looking for companies trading at huge discounts to their net liquidation value, NLV. But that is a very, very aggressive defensive strategy of investing, looking at value opportunities, which in today's market just does not exist, because you'd be lucky to find anything that's even close to its net liquidation value. That's why Twilio was one company that was trading close to its NLV back in the day when it was at around, whatever this price was, $40, $41. Even then, I think we talked about it. I think it had to be closer to 30s, low 30s for it to be trading at NLV. And the interesting thing is that we actually have that on our platform. So if you come over to MoneyVest Metrics, eventually you'll be able to see. So under MoneyVest Metrics, we've kind of broken this down into 5 different categories: growth, financial health, valuation, efficiency, profitability. And under evaluation, I believe, so if you come down to valuation table, you will be able to see the net liquidation value of any company. So this right here is the actual NLV for Apple in this example. And then you'll also be able to take a look at net liquidation value to shares outstanding. So NLV per share. So you know how we have the market price per share, the book value per share, the earnings per share. This is the NLV per share, which is basically telling you that this price, literally this is the price, that below this price would make it a no-brainer buy. A no-brainer buy because it'd be trading below its asset value. So right now, of course, for Apple, it's negative. And the reason being is because if you take all the assets for Apple, sell all liabilities, basically clear all liabilities, and if you don't really have anything left over for us to realize for Apple, even though it's got more cash, liabilities are also pretty high. And as a result, we don't have anything left over. That's why it's negative. So right now, Apple doesn't have a net liquidation value that we can materialize right now. And the reason for this is because we also look at a different criteria. We have a formula because we've got, assets such as cash, property, plant, equipment, accounts receivables, and then intangibles like goodwill and all that stuff. So what I've done, that I've created a whole formula, is that I've only realized 100% of cash, 50% of property, plant, equipment, and I think 50% of realized accounts receivables, because if there's accounts receivables for, let's say, $1,000, not every one is going to pay you, right? Not $1,000 is going to be realized. So we essentially take 50% as bad debt and 50% as received from those accounts receivables, and then so on and so forth. But we clear all liabilities at 100%, and whatever's left over is the net liquidation value. So that's the formula that we're using for every company in our platform. So if you find any stock on the MoneyVest Metrics, if you come across any stock here that has a positive value here and a positive net liquidation value per share, NLV per share, then that would be kind of like a no-brainer buy price, because below that price, so the market price is below the NLV, then it would make for a huge discount, huge deal for that stock here. So we've got that also included on our platform that you can also explore. Okay, so coming back over to the markets, and let's take a look here. So what's going on? So we got QQQs recovering a little bit, so getting bought back up. 464 is where it's at, down about 17 basis points. SPY down about almost 40 basis points. The 10-year treasuries just under 4.5, and the Dow Jones here selling off quite aggressively. CrowdStrike, by the way, getting added to the S&P 500. Is flat, but of course did rally yesterday, up a little bit over 7% on the back of that S&P 500 inclusion. So huge news for CrowdStrike, because it's a huge accomplishment to be added in the S&P 500. And again, they do need to see multiple quarters of profitability, a market cap of certain size, certain establishment here, and CrowdStrike absolutely fantastic here in terms of growth and cybersecurity. But again, valuation's a bit too much. So when do you see NVIDIA coming down to buying levels? So we talked about this in our yesterday's market update, right? So usually what happens is, stock split takes place, and then the stock, of course, comes down after the split, and that gives us a huge buying opportunity once again for that stock. It's happened with almost every company that's done stock splits in the past, except for, I think it's happened with a lot of companies in the past that have done stock splits, right? So we'll have to wait. We'll have to wait and see when NVIDIA starts to roll over a little bit, and when can it start pulling back, so we can start scooping up some shares here once again. So that's going to be it for today, folks. Thank you so much for joining in. Tomorrow we're going to be live a little bit early to cover the entire inflation numbers, CPI numbers, very, very important, at 8 a.m. Eastern. So make sure that you tune in. Share the live stream with your friends, family members, people who may want to join and listen in with us for these CPI numbers. And then, of course, later tomorrow, we've got Jerome Powell's speech, summary of economic projections, the statements, everything is going to be discussed. A very, very exciting day tomorrow. So hope you all are ready. Again, thank you so much for joining for today's live stream. Take care. Make sure that you drop a like, subscribe to the channel. Also, don't forget, if you want to join our MoneyVest beta launch, we got limited spots left, 51% discount. You can lock this pricing in forever, and you'll have beta access to this entire platform on July 8th. That is the tentative date right now, including our MoneyVest metrics, discounted cash flow model, discounted earnings model, fundamental analysis, detailed overview with visual charts that you can plot however you want. You can put line charts and stuff and basically just analyze a lot of companies. So